One of the most complicated financial documents a business can have is a balance sheet. And if you're like most business owners, it can be really confusing when you try and read one and understand what it says. Well, today I'm breaking that down for you in the simplest way possible. What's up, everybody? Craig here. I'm a profit coach who loves helping service-based business owners finally find some peace of mind when it comes to their money. Running a business is hard enough. You shouldn't need an accounting degree just to understand your financial documents. Oftentimes I run into a business owner and they are struggling to look at their cash flow statements or their profit loss statements or their balance sheets and not only read what they say, but then know exactly what should they do with those numbers once they see them. Well, I'm big on making things simple. And so today I'm going to be walking you through what a balance sheet is, how to read it, and how you can utilize it in your business. Now, if you're trying to read a profit loss statement or a cash flow statement, I do have walkthrough videos on those as well. I'll link them in the description below for you. A balance sheet is broken into three core sections. You have assets, you have liabilities, and you have owner's equity. Really, a balance sheet, we want it to balance. Basically, you take the assets, you subtract the liabilities, and you should end up with your owner's equity. So it should balance out across. If it doesn't, then that means somewhere along the line in the bookkeeping, something went wrong and we need to go fix it. Now let's talk about that first section, assets. An asset is something the company owns that has tangible value. And typically this is broken up into two sections. You'll have current assets and non-current assets. A current asset is anything that the company expects to turn into cash within a year or so. This can be inventory, this can be accounts receivable. A number of things might fall under this category, but it's something that you expect to become cash within a year. Non-current assets are things that might take more than a year or are not expected to turn into cash for a while. This could be land or property. It could be patents, things like that, where it might take a while to recoup that cash. You're not expected to get it back out. Remember, assets are things of value. So these are the things you have that are adding value to the business, whether it is cash, whether it is an asset. The next section is liabilities. These are the exact opposite of assets. While assets are something that the company owns, a liability is something that the company owes. Once again, this is going to be broken into two core sections. You're going to have your current and your non-current liabilities. Current liabilities are debts you expect to pay off within a year. So this could be payroll expenses. This could be accounts payable. These are short-term debts that you intend or plan on paying off within 12 months. Non-current debts, just like in assets, is debts that last longer than a year, things you do not expect to pay off within a 12-month period. This could be tax debts or leases or different things on properties. And the third section is owner's equity. This is anything left in the business after liabilities have been taken into account. This section is important because retained earnings is going to show you exactly how much money stayed in the business. We're taking those assets, we're removing the liabilities, so you're taking what you have of value, we're removing the money you owe, and what's left is the actual value, the owner's equity of the business. This is something that an outside party is going to look at because this tells them if they're either buying a company from you or they're wanting to see what the financial health of your company is, we want to see some money there. If your liabilities outweigh your assets, then obviously that's not a good thing. Your business is upside down and running in the red, and that's going to be a red flag for the business owner or anyone outside looking in. So how can you use a balance sheet for your business? Now that we know how to read it, what can we do with that information? Well, if you're a business owner looking at your own balance sheet, you can use it to guide growth and guide decision making. You can see areas of waste or areas of need and growth opportunities. A lot of times if a business is strapped for cash, they're struggling with cash flow, we can look to a balance sheet and those liabilities are going to show that, yeah, we are probably strapped for cash because we owe a lot of money to a lot of people, and that's really hindering our growth. The second way we can use a balance sheet for your business is to really see your relationship with debt. Again, if your cash flow is tied up in debt, we can see that in a balance sheet and we can start seeing a path forward to free that money up within your business. In a nutshell, a balance sheet is going to show you whether your company or another company is thriving or struggling. So it's important to take that information and then start making some positive changes. Now, this is where a lot of business owners get stuck. We see that there's a problem. Maybe we're struggling. Maybe we see the balance sheet and we're going, okay, there's a lot of room for improvement. What do I do next? Well, accounting documents are valuable. They show you where you've been. They show you exactly what's been happening in your business. But I'm a believer you need a system to manage the day-to-day and the future of your business. And that's exactly what I do with my clients. I help them implement a cash system that not only gives them clarity and control over where their money's going today, it helps them scale in a financially healthy way for the future. If you've been struggling financially in your business, don't put it off any longer. In the description is a link to my calendar. Schedule a free consultation. We will dig into your business, see what's been going on, how can we help improve things so that you can build the business of your dreams. Thanks for hanging out with me today. If you found today's content valuable, please like and subscribe. And if you are looking at your balance sheet, you probably need to look at your P&L or your cash flow statement. I have a link to another video that you should watch next. That's going to show you exactly how to utilize the cash flow statement within your business. Thanks for hanging out. I will see you guys in the next video.